Hey, Dustin Tibbetts here, financial advisor with Jazz Wealth Managers. How you doing out there today? Thank you so much for watching. We just hit over 100,000 subscribers. Happy that you guys have chosen to watch us and hopefully subscribe. We're financial advisors here. We invest for you for the long term. We plan with you. We teach you, and we'll even trade with you on a day-to-day basis if you'd like with our new office trade series coming up, so more on that to come. I had a client reach out to me and say, hey, starting to trade the markets a little bit, and I'm just a little confused about pre-market, market, post-market, and overseas trading. If you would, could you explain a little bit of that to me? So today, that's what we're going to do. Before I start that, though, if you are one of our clients or research members, go on over into the dojo, which is our private portal that we've created all from scratch here. And what I want you to do is go to this guy right here and just start searching candlesticks. And when you search that, you're going to find 3 different classes, whether you're a research member or a client of ours. And what this will do is kind of get you up to speed with some of the things I'm going to talk about here today real briefly. So we have lots of great classes in there that you can check out if you are interested in that. And of course, if you want to join, it's $13 a month to join our research site if you're interested in that as well. Here we go. We're going to talk about really what makes you start to think about what is a pre-market, post-market, overseas trading, and things like that. And it all starts with a gap. So if I go over here, we'll take a look at something, one that I'm familiar with here, Alta. All right, we did the earnings play on this one, and it was a bit exciting. So anyways, if you look at the stock here, generally, and we're looking at the candlesticks, if you look, where you finish one day is typically where you start the next. I'm going to zoom in a little bit so you can see. For example, here, we have the open, we have the low, we have the high, and then we also have the close, which was really close to the high of the day in this case. Now, if you go into the next day, the open is generally pretty close to where you finished the day before. Sometimes there's a large difference between the close of one day to the open of the other, and that's because of pre or post-market trading. The stock market is open from 9:30 to 4, and this is sort of for the beginners out there, but maybe share it with your kids or whoever you're wanting to get interested in the markets. Well, the market's open 9:30 to 4, but it's actually open from 4 a.m. to 9:30 in the morning. So you can do what's known as electronic trading, meaning you can go and buy and sell things in the morning. So if a stock is moving largely in the morning before the market's open, then that's usually earnings related or some kind of news, upgrade, downgrade, whatever it may be. Now, the market's open from 9:30 to 4. Well, what happens is the platforms, the trading platforms, they only show you, by default, what's going on from 9:30 to 4. Anything that happens before the market or after, which is after 4 o'clock to like 8 o'clock, depending on the exchange, would show in the form of a gap. So this is called a gap here. And more particularly, here's the earnings gap of Alta. So it closed all the way up here at about 347, let's call it. Well, they had earnings come out after hours. And so the next morning, people weren't happy with that, right? In fact, this case, they reported that the CEO was going to step down. And so the stock price reset itself, and when it opened the next day in official regular market hours, it actually opened at like 317. So there's a discrepancy between where it closed and where it opened. That's known as a gap. So that's what you have there. Pre-markets open from 4 in the morning till 9:30 Eastern time. 9:30 to 4 is the regular hours that we're used to seeing and participating in. And then you have 4 to 8 after hours, when a lot of the earnings and things like that come out. So that's the first part. Going on to the second part here, we'll talk about overseas trading, because there's some stocks that you may look at, like Sony is a great example, where it seems like every day there's a gap, right? Something that causes the close from one day to the open to be considerably off. Well, in this case, what happens, this is known as an ADR. So in the case of Sony, I just happen to know this one, but Sony's traded in Japan. The actual company is based in Japan. It trades over there. What you're seeing here on SNE by looking at that symbol is the price just reflecting the action that happened in Japan. It's known as an American Depository Receipt is what an ADR stands for. And so we're really not seeing price action during our day, unless there's news over here in the States. We're really just seeing a reset from what happened in Japan. So it looks weird, right? There's not a lot of movement during the regular market, but overnight, which is where it really trades in Japan, the ticker symbol is like 6785 or 6758 or something like that, if you were to look it up over in Japan. Funny, they don't go by tickers. So what we're really seeing is the trading action is inverted. Right? So we're really just seeing, boom, the stock was up. Like in this case, the stock was up over in Japan. And so in the United States, it just resets. There wasn't a lot happening here in the States as far as Sony's concerned. And so the stock really didn't move. There's not much to do because the action's already been had. And so that could be a little bit different as well, because you think you're going to trade a stock actively. Sony wouldn't be a good one to do that with, because there's not a lot going on. Same with trading, for example, gold. Right? Gold closes before the stock market closes. Oil closes before the stock market closes. I believe it closes at 2:30 Eastern time. Still moves around, but the regular sort of electronic cash session happens until 2:30 p.m. Eastern time. Then you just notice kind of like nothing happening there. There you go. Now you know why. So most commonly, the reason for gaps is earnings, upgrades and downgrades, things like that. You'll notice that with earnings season coming up here. And if you're going to trade before the market opens or after, you certainly can. Most every broker at this point requires that you place limit orders, though, and no market orders. So if you're used to placing market orders, or if you're like on Robinhood or something, I don't know how they do it over there, but if you were to hit buy after hours, you'd probably have special permission to do that, and they would ask you to input the price that you want to buy at. They would not allow a market order over there. So there you go, kind of a basic one to kick off the week there, but sometimes we got to do that, go back to the basics to kind of answer the questions of the function of the market rather than some strategy or something like that. So hope that helped you. If it did, I hope you'll hit the subscribe button or at least a thumbs up. Let me know in the comments below if you like the basic sort of functional videos like this, because there's a million things I can talk about, or if it was kind of boring. That's cool too. Enjoy your day.